Hey there and welcome. Ever feel like the UK tax year is just a bit of a puzzle? Well, you are definitely not alone. That's why we've teamed up with the experts at Pro Tax Accountant to put together this clear, straightforward guide. Because look, whether you're an employee or you're running your own show, understanding this stuff is absolutely key. So let's jump right in. But first, let's start with a question that I bet has crossed your mind at some point. Why on earth does the tax year start on April 6th? I mean, why not January 1st, like, a normal calendar? The answer, believe it or not, is a wild story that goes back centuries, involving a huge calendar switch-up and a weird little leap year quirk. It's a great bit of history, and we're going to unravel it right now. All right, let's dive right in and start solving this puzzle. We're going to kick things off with the absolute basics, building a really solid foundation so you can feel way more confident about your finances. So, here's the answer to that big question. Way back when, the tax year actually started on March 25th. But then, in 1752, Britain decided to switch from the Julian calendar to the Gregorian one, which meant they had to literally skip 11 days to catch up. Now, the Treasury wasn't about to lose 11 days of tax revenue, no way. So they just shifted the start date forward by 11 days to April 5th. Then, a funny little leap year thing in 1800 nudged it forward one more day to April 6th, and, well, it's been stuck there ever since. So who actually needs to care about this whole April to April schedule? The short answer, pretty much everyone who earns money in the UK. We're talking employees on PAYE, self-employed folks, landlords renting out property, even if you just have savings or investments. This is the timeline HMRC uses to look at your finances. Okay, so now that we've got the why, let's get into the how much. We're going to take all these abstract numbers and tax bands and make them feel real. We'll do that by looking at a couple of real-world examples, because this is where the theory really hits your bank account. First up, let's meet Tom. Tom's a software developer, he's based in Manchester, and he earns a solid £60,000 a year. Now, because he's in England, his tax is calculated using the bands that apply to England, Wales, and Northern Ireland. So, here's how his 60 grand salary gets sliced up. The first £12,570, that's completely tax-free. That's his personal allowance. Great start. The next chunk of his income, all the way up to about $50,000, is taxed at 20%. And then that final bit that he earns above that $50,000 mark, that falls into the 40% higher rate band. So you do the math, add up the tax from each of those different slices, and Tom's total income tax bill for the year comes out to £11,431.40. And remember, that's just the income tax part. National insurance is a whole other thing on top of that. Okay, now let's head north of the border and meet Fiona. She's a nurse living in Glasgow, and she earns £40,000 a year. And this is where things get really interesting, because she's in Scotland, so her income tax is worked out using a completely different set of rules set by the Scottish Parliament. And right away, you can see it's a different ballgame. Scotland's system is much more detailed, with more bands and different rates. Fiona's £40,000 salary is actually split across 3 different tax rates: the starter, the basic, and the intermediate. It's just a more gradual way of applying tax as income goes up. And when you run the numbers for Fiona, her final bill comes to £5,372.84. It's a perfect example of how simply living in a different part of the UK can have a direct impact on how much tax you end up paying. Okay, enough theory, but what about your tax story? How do you check it yourself? In this next part, we're going to walk through exactly how you can check your own tax information directly with HMRC, putting you back in the driver's seat. First things first, you're going to head over to the gov.uk website and sign in to your personal tax account. Once you're in, you can see everything: your tax code, your income, your national insurance. It's also where you can check that you're getting all the right allowances, and, most importantly, if you spot anything that looks off, you can report it right then and there. And what are you looking for exactly? Well, these are the big red flags. If the income HMRC has for you doesn't match what's on your pay slips, that's a problem. If you know you're making pension contributions but you're not seeing the tax relief for it, you need to follow that up. And an incorrect tax code, that could mean you've been overpaying or underpaying tax every single month. All right, let's switch gears and talk about the business world. This section is specifically for all you sole traders, landlords, and limited company directors out there. We're going to cover the absolute essential tax rules you've got to know. You know, one of the biggest decisions you make when you start a business is the structure, because it totally changes how you're taxed. On one hand, as a sole trader, you are the business.
Your profits are your income, and you pay income tax on them. But on the other hand, a limited company is its own separate legal thing. The company pays corporation tax on its profits, and then you pay tax separately on the salary or dividends you take out of it.
Now, for anyone who has to file a self-assessment tax return, this number is one you really don't want to forget. £100. That is the immediate on-the-spot penalty you get if you miss that January 31st deadline.
And here is the crucial point, the thing that catches so many people out. This penalty has nothing to do with whether you actually owe any tax. It's a penalty for filing late. You could literally be owed a refund from HMRC, but if your paperwork is late, you will still get fined that £100.
Okay, we are getting close to the end, so let's pull everything together into one place. Think of this final section as your own personal cheat sheet, a quick, simple summary of all the key numbers and dates you need for the 2025/26 tax year.
Here are the essentials to lock into your memory. Your tax-free personal allowance is staying put at £12,570. The threshold for VAT registration has gone up to £90,000. And get these dates in your calendar right now. October 5th is your deadline to register for self-assessment if you need to. And the big one, January 31st, 2026 is when you have to file your return and pay what you owe.
So, there you have it. We've looked at the history, we've crunched the numbers, we've walked through the practical steps, and we've got the key deadlines. We've basically given you the map for the UK tax year. So the only real question left is, are you ready for the journey? And just remember, this stuff can feel complex, for sure, but you absolutely do not have to figure it all out on your own. If you ever feel like you need a guide for your financial journey, the experts at ProTax Accountant are always there to help. Thanks so much for joining us.